FY26 earnings conference call hosted by ICICI Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there'll be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pritish Urumkar from ICICI Securities. Thank you, and over to you, sir.
Thank you, operator. Good morning, everyone. I welcome you all to Apollo Micro Systems Q4 FY26 conference call. I would like to thank the management for giving us the opportunity to hold the conference call. From the management team, we have Mr. Karunakar Reddy, Managing Director, Mr. Sai Kumar, Full-Time Director, and Mr. Sudarshan Shiluveru, CFO. Now I hand over the call to the management for opening remarks. Thank you.
Good morning, everyone. Myself, A. Krishna Sai Kumar, I'm the Director of Operations, Apollo Micro Systems. Thank you all for being with us today. It's always a privilege to engage with our valued investors and provide updates on our performance, strategy, and future outlook. I'm pleased to share that we have delivered our highest ever quarterly and 12-month revenue, marked by consistent execution, operational discipline, and a strong commitment to indigenization and the Atmanirbhar Bharat initiative. I trust you have had the opportunity to review our financial results, shareholder letter, press release, share sheet, and investor presentation. The shareholder letter reflects the true thoughts from Apollo Micro Systems, which will help you understand where we are headed and our long-term direction. The press release provides a concise overview of our annual and quarterly financial performance. The share sheet offers a snapshot of who we are, what we do, our financial highlights, and a glimpse into Vision 2036. The investor presentation provides a comprehensive overview of our weapons, systems, and subsystems, explosive portfolio, financial performance, and strategic priorities. This marks our fourth interaction to conclude fiscal year 2026. We are pleased to begin with a significant milestone that marks our continued growth and global progress. We are pleased to announce that an additional acquisition by our subsidiary, Apollo Defense Industries Private Limited, is expected to be completed before end of this financial year, which will significantly complement our organic growth and overall strengthen our business. We are currently charting our Vision 2036 document, which will be unveiled soon and will outline our detailed strategy, three key growth areas, and strategic direction for Apollo's growth over the coming decade. A glimpse of Vision 2036 has already been shared with you through the shareholder letter and the tear sheet. Our vision is to grow as a global OEM over the next 10 years with recognizable revenue streams across land, air, and sea domains, expanding our presence in Indian markets while continuing to scale in global markets, delivering valued products built with conviction, and strengthening our R&D capabilities with the most advanced and futuristic technologies. The four pillars of our vision are: first, becoming a global OEM, made in India, transitioning from a Tier 1 supplier of critical electronics to a recognizable global OEM in defense platforms, where Apollo's name is on the platform itself, not only inside the electronic system which form part of a platform. Second, building recognizable and diversified revenue streams across land, air, and sea so that no single platform, program, or customer defines the Apollo story. Third, deepening our presence in Indian defense procurement while meaningfully expanding in global markets, converting our first export order into a sustained international revenue stream. And fourth, driving conviction-led innovation, which has always been a backbone of Apollo Microsystems, backed by futuristic R&D in radio frequency technologies, artificial intelligence, autonomous systems, and immersion navigation technologies. We do make mistakes. Some bets will succeed, while others may require a course correction. What I commit to you on behalf of the entire team Apollo and the management and the managing director of Apollo is that we will communicate with complete transparency through both success and setbacks without glossing over challenges or overstating achievements. Let me now take you through our consolidated performance in the last 5 years. Full year, that is 2026, and fourth quarter ended 31st March 2026. Over the last 5 years, we have delivered strong compounded growth and operational performance. Between FY21 and FY26, our revenue grew from operations at CAGR of 30%, while EBITDA grew at a CAGR of 41% over the same period. Our bottom line significantly outpaced top line growth, registering a CAGR of 64%. We also witnessed meaningful margin expansion during this period. EBITDA margin improved from 19% in FY21 to 24% in FY26, reflecting an expansion of 500 basis points. PAT margin expanded by 700 basis points, increasing from 6% in FY21 to 12% in FY26. The ROCE improved substantially from 10% in FY21 to 18% in FY26, demonstrating enhanced operational efficiency and capital productivity. Our working capital cycle has also seen a significant improvement, reducing from 626 days in FY21 to 359 days in FY26. Moving to our FY26 performance, during the last call, we had indicated an internal target of achieving a 15% PAT margin at the standalone level. We commit, we deliver. We closed the year with a full year PAT margin of 16%. At consolidated level, our top line of FY26 stood at 904 crores, registering a strong year-on-year growth of 61% compared to 562 crores in FY25. EBITDA, excluding other income, grew significantly by 69% to 218 crores in FY26 as against 129 crores in FY25. A similar growth trajectory was witnessed in PAT, which outpaced revenue growth and increased by 91% to 107 crores in FY26 compared to 56 crores in FY25. FY26 has been a breakthrough year in Apollo's history, marked by strong financial discipline and operational execution. During the year, ROCE and ROE stood at 18.23% and 11.21% respectively. EBITDA margin expanded by 114 basis points to 24% in FY26, while PAT margin expanded by 185 basis points to 12% in FY26. We made the highest investment in R&D within the industry during FY26, with R&D expenditure amounting to 8% of revenue, which is around 72 crores in absolute terms. Notably, we recorded zero attrition within our R&D team during this year, reflecting the strength and stability of our talent base. In FY26, our focused and rigorous R&D efforts culminated in the successful development of products such as mini torpedo, sensor suits for underwater autonomous vehicles, fiber optic gyro-based INS systems, and several other advanced solutions. We are also actively working on multiple critical and next-generation technologies and solutions that will strengthen our future capabilities and growth trajectory. I would now like to draw your attention to some of the key highlights of FY26 that have laid a strong foundation for the years ahead, including a successful fundraise, greenfield expansion in Telangana, 100% acquisition of Ideal Explosives, receipt of our first export order, a tri-party alliance with Indian Navy, IIT Chennai, and AMS, an MOU with GRSC, We also received an industrial license for TNT and RDX through a subsidiary company, Ideal Explosive. We have received a DPIIT license covering UAVs, INS systems, radars, torpedoes, underwater mines, ATGMs, decoys, shafts and flares, aerial bombs, rockets, missiles, and loitering munition. This is a remarkable achievement which are a lifetime license for the company and which paves a way and a road for penetrating into a full-fledged platforms for the company, for the Indian markets as well as for the global markets. And also we have received transfer of technology for direct energy weapons, including laser-based DEW and electro-optical tracking systems. I would like to now touch upon a quarterly performance. On a consolidated basis, Q4 FY26 marked our highest ever quarterly revenue, EBITDA and PAT performance. Revenue surged by 81% year-on-year basis to 293 crores compared to 162 crores in Q4 FY25, driven by robust execution of our order book and the successful transition of multiple products in production phase. EBITDA also witnessed strong growth, increasing by 88% to 68 crores in FY26 Q4, and the PAT recorded an exceptional growth of 164% year-on-year, rising to 37 crores as against 14 crores in the corresponding quarter of the previous year. Our order book as of 31st March stood at 1432 crores on a consolidated basis, providing strong visibility for future growth. Our strengths, Apollo heritage strength has been in the air and underwater domains, including missiles, electronic warfare, avionics, torpedoes, sonars, and underwater mines. Our presence in land systems has historically been limited. However, this is now changing in a deliberate and well-resourced manner. FY26-27 will mark our serious entry into key defense domains, including armament electronics, fire control systems, and battle tanks, infantry combat vehicles, and artillery platforms, vehicle-mounted counter-drone systems, with trials scheduled in the upcoming quarters. We have done remarkable progress in development of our futuristic, rocket programs like the BM-21 Brad rocket. As you are all aware that we have been a trusted partner and supplier for various programs in guidance and navigation systems. One such program is the Pinaka program, and for many other programs. We will also continue our role as the approved production partner for DRDO, and you all are aware that we are already a approved production partner for multi-influence ground mine, and we are expecting to become a DCPV partner for other variants of mine of DRDO. India's MIGM, which is India's first indigenous naval mine of its class, designated as Vigana, developed under DCPP with DRDO. Each of these initiatives represent a strategic foothold, together forming the foundation for long-term compounding growth over the coming decade. In the air domain, our focus areas include unmanned systems, loitering munition, tail platforms, and counter drones. Our commitment to emerging technology spans three core areas: RF systems, artificial intelligence, and inertial navigation systems. In RF, we are developing various RF sensors like RF tracking and direction finding systems, and various other electronic warfare sensors, advanced communication suits, the neutral backbone of modern combat platforms. In artificial intelligence, we are building embedded AI for sensor fusion for autonomous vehicles and underwater autonomous systems, and also for various battlefield applications, and also for the various direction finding applications. We have done a good progress in this concluded financial year in developing inertial navigation system based on fiber optic gyros, and we would be unveiling the product soon, and we will update our investors from time to time. These commitments underscore our continued operational excellence and reaffirm the strength of our growth trajectory into FY26. We have evolved from being a subsystem and systems manufacturer to establishing ourselves as a full-fledged weapon system manufacturer, a significant milestone in our journey of growth and technological excellence. Building on 41 years of technological excellence, we are poised to evolve into a multidisciplinary defense system powerhouse to drive next-generation innovation. Our vision is bold, built on strong fundamentals and an unwavering commitment in creating value for our stakeholders. Thank you for your continued trust and support. We now look forward to addressing your questions.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. I request to all the participants, kindly limit yourself to 2 questions per participant and rejoin the queue for a follow-up question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Goldman Sachs. Please go ahead.
Hi. Good morning, everyone, and thanks for the opportunity. Congratulations for a very good set of numbers and a very informative presentation uploaded on the exchanges. A couple of questions from my end. The first one is essentially, if I look at the revenue growth, very impressive. Order book is around 1430 odd crores. Now, my question is more on near-term scenario. What kind of order inflows we expect in FY27 and 28, let us say? Because if we don't get substantial order inflows, then this superlative revenue growth might not be sustained. So just want to get your thoughts on that, the order inflows that you expect for FY27, 28. That is the first question.
Can you continue with all your questions? I will answer it once.
Okay. The second one is essentially on FY36 vision. I mean, thanks for articulating it in the letters to shareholders. Just want to understand the key tenets of that FY36 vision. I mean, while you have explained in terms of products where you want to be the multidisciplinary company, but if you have any financial parameters, handy, if you can articulate them, that would be wonderful.
So I will go ahead with the first question. So primarily, we are expecting a large ticket projects, which we have been, quite vocal about for last, 1 year. And the time has come, and the clocking of this large ticket orders are due to come, and in time in this financial year we will be getting, and our order book size also will cumulatively increase, both on standalone as well as on a Concall basis. So that is something that I would like to you to understand. We will continue to grow at a similar rate, in this particular financial year and the subsequent financial year, backed by the size of the order book that we are going to have. The order book sizes will increase, significantly, as we have been telling. And that's something that is going to happen in this financial year. That's something which I want to tell. Regarding the FY36, we just wanted to give a glimpse of what we are trying to do. The more nitty-gritties of that, we will come back to, all, to our investors, and we will start being more vocal about it and how the numbers will culminate and all, from time to time. But at this point of time, where we are heading, we just want to give a course, for you to understand, what's the vision, that we have down the line.
Okay, sir. Great. That's helpful. Thank you.
Thank you. Next question is from the line of Abhijit Singh from Systematics Group. Please go ahead.
Thank you for the opportunity and good to see such great results. Sir, I want to understand what is our product and offering in the air defense systems that are going to come up, like QR SAMs and Kusha. So what is our capability and products and offerings going into these air defense systems? That is my first question. Second question, sir, where are we on the development of the RF seeker in the BrahMos? And do we also supply some other subsystems modules for BrahMos other than our development initiative on speakers?
Okay. So if you remember, in the previous Concall, our managing director, he has already informed to investors that, we have started the RF seeker development, in-house RF seeker development for a couple of programs. And the programs these are our internal, R&D programs, and we are investing heavily in that. And we are setting up a specialized, RF seeker, testing facility in our upcoming unit in Hardware Park. So this is about the RF seeker. And regarding our presence in QRSAM, Kusha, and other things like these are two nitty-gritty questions. I would not like to take on a con call, but I would like to tell that we have a good and decent presence in both the Kusha program as well as in the QRSAM program. Various systems like the fans, the actuations, and other systems are part of these programs actually. So as of now, I just would like to make it at the base.
Okay, sir. Thank you. Thank you so much.
Thank you. Next question is from the line of Gaurav Shah from Nitya Capital. Please go ahead.
Good morning, sir. Congratulations for a very good set of numbers. I have two set of questions. One is wanted to check on what is status of the Unit 3, which was under construction. Second one is on wanted to know your thoughts on the large inventory and trade receivables that we have on our books, and how do we see it coming down vis-a-vis the total revenue going forward?
So Unit 3 civil work is already complete for phase 1. So phase 2 civil work is still taking place. The some of the machinery which we have ordered have already been we have already received those machinery, and installation process going on. MEP electrical and other facade works are going on in phase 1. So we will be taking the position of the premises phase wise, and subsequently we will be shifting the machinery which is presently in the Unit 1 to Unit 3 on stage by stage basis. Okay. And regarding the inventory, the inventory holding days, there is an improvement in this financial year, and there is something which is going to be in the subsequent financial years as well. As you all know, that the predominant business that gets recorded are development orders actually, and we are expecting decently good production orders on in this financial year as well as in the subsequent financial year. Most of the programs have got matured, and a lot of other larger players have already started receiving orders. As we have been predominantly a subsystem and supplier to various platform integrators. We are likely to get a large production orders. As and when these production orders keep hitting and then the revenue starts recognizing, I think the inventory levels will slowly come down. But vis-a-vis the revenue size will also parallelly grow as the number of programs are increasing. Obviously the inventory will also keep growing, because in the gestation cycles of these raw material and the production and testing cycles of these different systems are very highly elongated actually, which is common amongst this industry. So there's nothing say a factor that has to be looked on that about the inventory and the sizes of it. As the business keeps growing, the levels will also keep growing. But as the scale of operations will increase, you will definitely see a decent improvement in the holding rates, because all the test facilities which we have been outsourcing for the last several years, we are setting up all the test facilities. So that is something that will contribute to the overall holding rates. That's what you will see an visibility in a few quarters down the line.
Okay, thank you, sir.
Thank you. Next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
I don't know how it is.
Darshil Zaveri?
Hello? Hello?
Yes, go ahead.
Hello? Hello? Can you hear me?
Yes, go ahead.
Yeah, hi sir. Hi sir. Firstly, sir, congratulations on a great performance, sir, and detailed presentation, sir. Sir, just wanted to understand. I was sorry, I was just there was a network issue for me, so I couldn't hear the previous comments. So, in terms of IDL, what is the revenue expectation that we have in this year and going forward, sir? And what utilization and margins is it focusing on currently, sir?
IDL last year performance stood at around 380 crores, little less than 380 crores. So it will continue to maintain a similar level of performance. So this is primarily a huge shift of management, which has been there for decades. Now, our outlook towards Ideal is totally different. As of now, I'm not able to give any guidance on Ideal. It's presently undergoing a transformation phase. In the next couple of quarters, we are taking a lot of initiatives in last 1.5 quarter, and in next couple of quarters, more initiatives will be taken. I think we will be quite vocal about, Ideal's, revenue guidance and other things from Q3 onwards.
Okay. Fair enough, sir. But currently at 350 crores, is it profitable or what do you feel, sir, right now? Like, if you just give a broad range in terms of like the potential margins that can it come to the consolidated margins that we're doing right now, or is it nearby? How are we planning to make it EPS accretive?
The last few years, Ideal was loss making. Okay. But there is a huge transformation, as I already told you, that we have started by taking up the initiatives, and the operational loss we have reduced significantly in at both EBITDA levels and at the different levels in the of the balance sheet. Going forward, you will see a huge improvement in that. As of now, it's undergoing a transformation. And one after the other, we are able to, do that.
Thank you. Darshil, I'll request you to come back for a follow-up question. Next question is from the line of Ronak Sanghvi from NAFA Asset Managers. Please go ahead.
Hello.
Go ahead, sir.
Yeah. Thank you for taking my question. I want to know a specific thing about, like, in the slide number 101, you have mentioned state-owned defense public sector units have recorded 42% surge in exports, reaching of 8,389 crore. A large part of these two are from explosives as part of ammunition, particularly for artillery. So, which is big demand in Europe. So, are you looking into that venture as well?
Yeah, we will be going heavily on artillery, side. We have already started getting orders, to that extent. Very shortly, we are going to get a 31, ammunition order as well. So, as and when, we keep getting, we'll definitely announce you. But this is one area which we will be expanding continuously. Explosive portion will be supported by our explosive, subsidiary Ideal Explosive, and the rest of the hardware and, whatever the intelligence is required, this is all done by the parent company of Apollo.
So, this will be like filled shells, filled artillery shells, not only the empty shells. Am I right?
Yeah.
Thank you.
Thank you. Next question is from the line of Pratik Bagadia, individual investor. Please go ahead.
Yeah, hi, sir. First of all, thanks for giving me this opportunity and congrats for a great set of numbers. So, I have two specific questions. First, I wanted to understand that you have mentioned that around management has participated in around 150 plus indigenous programs and around 700 plus onboarded technologies. So, can you throw some light as to currently at what stage are they? Are they in the serial production stage or still in the development or prototype stage?
No, that will be a very exhaustive question, Bagadia. So, but I will just give a touch base on it that, some of the programs are in development phase, some of them are in serial production phase, some of them are in, trials phase, like that actually. Okay. So, but, detailing of each program and all over the call, it's very sensitive also to, discuss. But, these are at a various phase levels, which are panning around the missile programs, the naval programs, the air defense programs, the land system programs, and all put together.
So, are we expecting any revenue contribution from them in the coming few quarters?
Yeah, obviously. Any indigenous missile program which is going for production, which you hear say, through the news, social media, or the defense news or any other, media, all those programs we will be having our, equipment going in it. Actually, that's a unique uniqueness of Apollo, that we have a presence across every indigenous missile program in the country. So that's how I can term ourselves as.
Okay, thank you. And my second question is with respect to the promoter pledge part. I remember last year when we discussed, the idea was to bring it down completely to zero in FY26. But as I can check, it is still around 39%. So can you give us a roadmap as to what does the management see?
Immediately roadmap I cannot tell, but in the last call, we said that in the upcoming financial year we are going to come out of this, and we stand by that actually, which is this financial year.
Thank you. Pratik, I'll request you to come back for a follow-up question. Next question is from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Yeah. Hi, sir. Good morning. Thanks for the opportunity. My questions are pertaining to the subsidiary Ideal Explosives. I want to understand more on the TNT and HMX side. First question is, if you can tell us why are we going with a smaller expansion, not a larger one? What is the particular expansion, like capex size we are doing in TNT and HMX? I understand it's 500 tons for TNT and 50 tons for HMX, but what capital will be used for that, and why not a larger capex space for these two products?
So, Ayush, primarily the TNT and HMX licenses which we obtain are the idea right for our industrial explosive requirements actually. Again, the capacities are not limited to that. For higher capacities for the defense explosive requirements, we would be doing a very large expansion. So the DPRs are getting ready, and as and when we feel it to be necessary that it has to be open in the market, we will keep disclosing, keeping in view of the sensitivity of the area that we are working to the investors from time to time.
Understand. One more question on these products is, what would be the global demand in your opinion for TNT, and what is the supply situation against it? Are there a lot of plants coming up outside of India to cater to this global demand, and can we see prices coming down that have gone up in the last 2-3 years?
Globally, the conflicts have been boiling at a highest peak level in the last 6 years. There is a huge depletion of stocks across the world in different various countries. And keeping in view of the ESG and other issues, there are a lot of plants which are unoperational for several decades in many countries. So this brings a lot of opportunity for the explosive companies, both in India as well as across the world actually. So the idea behind getting into explosive was one that we wanted to get into full-fledged platforms now that we have a lot of experience that we have put up, and some of which we have already demonstrated and we have been qualified, and some of cases we have been qualified as a production partner as part of the DRDO program. Some of the programs we are directly developing ourselves with the indigenous R&D and captive internal R&D investments. And some of the areas we have directly taken orders from Army and Navy. That's something which we are developing. So both as a captive requirement is one such thing we are going to do. Now that we are going to build up a facility for a captive requirement, we'll also be serving for the other markets also.
Thank you. Ayush, I'll request you to come back for a follow-up question. Next question is from the line of Amit Kumar from HDFC Securities. Please go ahead.
Hello. Good afternoon, sir. Congratulations for a great set of numbers. I hope I'm audible.
Yeah, very much so.
Yeah. So congrats, sir, for great set of numbers and a lot of licenses from Government of India. So my only question is, we can see a lot of potential from these new licenses, missiles, ATGMs, torpedoes, mines, aerial bombs, etc. So can you please in 2 minutes to explain that how much is the revenue potential from each of these? I mean, I'm not holding up for a specific number, but at least the guidelines and what could be the timelines for these materializing would be of great help.
All variants of mine, we have 2 variants of mine, one shallow, one deep water, and we have 2 variants of mine which are limpet mines or diver carried mines. Only these variants of mine alone would be a cumulative a market, very immediate market size of something like 4,000 to 4,500 odd crores, that we are expecting, which out of which some of the, orders, which we will be getting this financial year, some maybe next after financial year on a continual basis. We also have some opportunities, overseas, we have started submitting our offers. So just to give a glimpse of one area. So aerial bombs or dumb bombs primarily, that's also a very sizable market. We are trying to, reduce the cost of, the production of it, and something the trials have already been successfully. This is something which we are working with DRDO. Like that, there are many other opportunities, it will be too exhaustive, to take up in this call, but, the addressable market opportunity for the licenses that we have got is pretty large as a TAM, out of which where we are qualified, that itself runs into a, recently a very large numbers.
Okay. So, if I can squeeze in. So, considering all of these products, can we see a visibility for at least next 5 years at the current pace of growth?
That's something which I have already told in my speech itself, that we will continue to grow at the same pace or an accelerated pace in the years coming ahead, including this financial year.
Okay. Thank you, sir.
Thank you. Next question is from the line of Aryan Singh from Hem Securities. Please go ahead.
Congratulations, sir, on great set of numbers. My first question is regarding composition of the order book.
Composition of order book we have never given. I would like to refrain from the questions. I want to take it offline.
Okay, sir. My second question is what are going to be the best products which are going to contribute most of our revenue in the coming years?
No, it's not like that. What products are going to contribute to revenue? This is primarily, there are two aspects of it. One, predominantly our business has been coming through the DRDO with the development programs and through the system integrators, where whoever has been, awarded the, integration of a larger platform. Okay. So, it all depends on, which platforms are getting into production phase in various years. So it will be a very tricky question to answer. As and when there is an order book, then I will be able to tell that this is happening. But over next period of, few years, how that will culminate is something new. But please keep a watch on various weapon programs that are getting into production, and the announcements that are given by the government or various system integrators, including the defense PSUs and the private system integrators who have got orders and, which are getting into production. In all of those programs, we will be, having our, presence.
Okay. Thank you, sir.
Thank you. Next question is from the line of Kavish Parekh from 360 ONE Capital. Please go ahead.
Hi, team. Thanks for the opportunity. My question pertains to the current global supply chain environment. Are you witnessing any disruption in the availability of key supplies of critical components at this point? Could you also highlight the countries or regions from which you source these critical inputs, and if there is any potential impact that you see on your production timelines or costs or overall operations if these situations persist?
Nothing. See, this geopolitical issues and are something which are not new or something which are based on the current conflicts or something. This has been there since time immemorial. Okay. So, but as far as the the performance point of view is concerned, whether there will be a significant dent or not, in the years to come, that's something that is very tough to answer actually. But there could always be a timing issue because of the various, operational conditions which are running across the globe. As the day stands, the very immediate, global issue which we have faced with Corona, and at that time there was a supply chain disruption. Then there was a reset of, how to work in this particular type of environment of giving a guidance of, what material at what point of time, has to be, procured. So that's how we used to give our, guidance to our, OEMs and suppliers of the various semiconductors, which are our primary raw material. Accordingly, we were procuring. Okay, the similar reset will keep happening as, as and when any such, global events happen. But I think very immediate effect of, and denting of the, overall performance, is something, I don't contemplate. But the timing of the, revenue recognitions may shift by a quarter or so. I'm not specifically talking about me as such, as an industry also actually. But broadly per se, if you have to ask me, as of now, there's nothing very significant, that I could see. Everything is normal. As I'm speaking to you now, I'm in Middle East. Everything is good to go here. Everything is normal. So I don't think any issues should be there.
Great, sir. Great, sir. Good to know that. Thank you so much. That was my question.
Thank you. Next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, so congratulations on good set of numbers. And what I especially liked was the letter written by you. It was a very heartfelt letter and very sincere. And actually, we just started tracking the company. So basically, if you don't mind, if you can repeat the expected growth rate for our company, opportunity size for us in India under Atmanirbhar as an export, and the differentiators for our company. Are there any products where we are making sort of a monopoly, sort of competition intensity is quite less, sir? So these are my questions, sir.
But if I say that, I'm having a monopoly over certain things, then it becomes quite controversial. So I would not like to, term anything like that. But definitely we have a uniqueness, in terms of certain products where we are the only company who got qualified in certain areas. And in certain areas where we are the only, qualified, company who is a full-fledged developer with all-round, IP available with us, including the explosive portion of it. Although there are, competition, in certain areas where they end up to be only a system integrators or a production partners actually. So it's a variable this thing, but there is nothing like a monopolization, may not be the right word, but we have a unique standing point where we have the ability to re-engineer and develop and advance technologies by virtue of holding the IP with us, which is a key differentiator compared to many other peer players of that specific technology or of that particular area of where we are working. That's how, I would like to, professionally term it as.
And coming to the opportunity size in exports also, and also the fact that the last budget, if I'm not wrong, last financial year was the first year by Government of India where the 100% allocated defense budget was used. And I believe the dynamic Defense Secretary, Mr. Singh, is doing great work over there. So what is the expected growth rate for us and the company and the sector and
definitely a dream. Definitely a dream come true and definitely a beautiful achievement by, Ministry of Defense, Government of India. I personally congratulate, for all the stakeholders who have contributed in achieving that. And unfortunately, I could not be a part of, that achievement, which I definitely regret on my part. But we are very strong in our conviction that, our exports going forward will start inching to grow and subsequently will start escalating on a, higher scale. For which, all the requisite initiatives we have started taking up. The audits by some of the customers of interest, who are interested to work with us and place orders which are export opportunities. The audits have already started actually. And we are just, expecting our new facility to get ready so that, we can firmly and strongly take up the opportunities, because once we commit, we have to deliver them on time. That's something which will be very important. And now that the portfolio of the, explosives also will be growing in the next few quarters for us, this is something, a larger opportunity we would be eyeing. As I already told to other, investors in the Concall, we already started, submitting our offers for various export opportunities. And in the years ahead, we will be meaningfully good amount of share in the export, size which is being, recorded as an export from the country.
And there was one large order from Navy for, I believe, mines or something, torpedo, something, sir, because
We are expecting any moment. We are expecting it any moment. Any moment, we should be getting this approval from the Ministry of Defense as a back approval. So as and when.
So sorry to interrupt. Your audio is not clear.
So we are expecting this back approval any moment. As and when we receive, we'll definitely keep you posted. But this is something that is going to happen very shortly.
That's wonderful to hear, sir. And the government also intends on spending the full defense budget allocated. Good times are there for us, sir. Thank you very much, sir.
Thank you. Next question is from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, hi, sir. Mr. R.K. Singh, the Defense Secretary, recently said in the CIA summit that the private sector might be involved in this ballistic missile production. So how do you see yourself if this happens?
It's fantastic if someone is taking the opportunity, then I should be a key contributor because I have a lot of build blocks already available with me. But presently, that's not something that we are eyeing by ourselves.
Okay, but it will expand the opportunity size for you, right?
It will definitely expand the opportunity size. We have some interest coming from few players, who are eyeing such very large programs. We would be, more than happy to work on collaborative mode. This is definitely an era of collaboration. We are open for opportunities wherever and whoever company would like to collaborate along with us and utilize the length and breadth of the experience in the IT build blocks that we have built over the last 40 years. And it would be lovely working, together on a consortium basis. That's how I would comment as of now.
And sir, this government proposed R&D fund of 1 lakh crore. How do you see yourself being affected by that, positively or otherwise?
I'm not sure if you put any thought on that, as of now. I have no comment on it.
Thank you. Raj, I'll request you to come back for a follow-up question. Participants, I'll request you to limit yourself to one question per participant. Next question is from the line of Shreyansh from SG Securities. Please go ahead.
Hi, good morning, sir. I had a couple of questions. The first one was on the acquisition that we have. I think we've been talking of that RF acquisition. So if you could give some more details on where, which line of which area we have that acquisition and like quantum and what kind, like how do we intend to fund that? Some more details around that. I know you said it's going to close this year, but where are we with that?
As of now, I'm bound by NDA. I'll not be able to divulge any much detail. In next few, before end of this quarter, we'll start getting to hear, more significant news, which we have been vocal during the last quarter Concall as well. So that has got little delayed, owing to the global conflicts and the various processes internally that we were contemplating couldn't happen. But as things get progress a little more, we will be more vocal, and I will keep you posted.
Thank you. Next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, I wanted to understand on this order book of 1430 odd crore, how much of this we expect to execute in this year?
It's a tricky question. We have, a few upcoming orders as well. Some of the orders, will be executed in this financial year. Some will spill over to the next financial year. But we have some of few orders expected in this financial year, which will upkeep the momentum growth that we have been demonstrating. That's all I can say.
For this year, what should be our estimate on revenue and margin, sir?
We'll continue to grow at similar pace.
Thank you. Ankur, I'll request you to come back. Next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah, hi. Thank you for taking my question. So firstly, if I look at our standalone, which is the organic growth for the year, has been around 36% in terms of revenues, versus I think the earlier guidance sort of was 45 to 50% sort of CAGR. So just wanted to get your brains on.
I'm sorry, getting disturbed. Can you be a little slower?
Yeah. So the question is that our guidance for the organic growth was about 45 to 50% in terms of revenues. The standalone revenue growth for this year has been around 36%, so slightly lower than that. So just wanted your thoughts on that. And like going ahead, do we continue to maintain that 45 to 50% CAGR organic growth guidance, or are we sort of changing it given that, say, some of the bigger orders that we were expecting last year didn't materialize?
Certain projects which we expected to be, executed in the last quarter of, previous financial year, that couldn't happen because of certain approvals, which got pending actually, from our customers, okay, which are still lying. That's how the holding, inventory is all about actually. That's something that we would be getting eventually. Generally these are all timing based, based on the various approvals that we get from time to time. It's fully restricted actually. So that's how, we couldn't meet that, 8-9% of guidance, we have just got missed. But we will bounce back and, we will continue to maintain similar momentum.
Thank you. Next question is from the line of Rahil Dasani from Mithil Analytics. Please go ahead.
Yeah, hi. I'm audible?
Yes, sir.
Yeah, I have two quick questions regarding ideal explosives. First of all, how easy is it to get into the defense explosive customers and utilize a new capacity, especially IDL having an industrial explosive supplier tag? And secondly, what margins are possible in TNT and HMX? Because as we know, IDL is currently loss-making, and maybe this expansion and new products change that. Otherwise, Apollo's standalone numbers will dilute. These two questions.
Good question. The second part of it, I will tell you, see, on an averaging, when it goes for a console, then definitely there will be a dip owing to the presently negative EBITDA of Ideal. But as I already told that, it's in a transformation phase, which is purely temporary, and this is something which will start getting bounced back in next few quarters down the line. Regarding the exact margins, kind of a guidance that I will start giving from Q3 onwards, which I have already told actually. Regarding your first question, whether this, the new market, which is, the defense explosive thing, we are already part of a defense explosive market. The various systems that we are supplying already, are filled with it, and where we are actually outsourcing it. It's something that we would continue to do with our capsule systems actually. So we have been part of the defense ecosystem. We have been part of the defense technology ecosystem, which is DRDO. So I don't think there is any challenge with us. For us, rather, to penetrate much deeper into the market. The size of the market is pretty large, and the size of the industry size, which is presently supplying for it is pretty small. So I think, we definitely have a very large opportunity owing to both captive requirement and also for the requirements of the country.
Thank you. Ladies and gentlemen, we'll take that as our last question. I'll now hand the conference over to the management for closing comments. So would you like to give any closing? Sorry.
Yeah. Thank you. So, we extend our sincere gratitude to the Ministry of Defense and Government of India for their continued trust in the Indian defense manufacturing ecosystem. Their confidence reflected through substantial investment is a strong endorsement of our nation's industrial capabilities and innovation potential. We remain steadfast in our commitment to delivering advanced solutions that bolster operational readiness and strengthen national security. It is an honor to serve the nation, and we stand fully prepared to support our armed forces under all circumstances. I, joined by our MD and CFO, extend our heartfelt thanks to all our esteemed investors and analysts for being with us today. Your continued trust and partnership mean the world to us. Your participation and feedback are invaluable to us. We remain committed to enhancing our performance and driving sustainable growth. We look forward to welcoming you to our facilities, where you will have the opportunity to observe our operations and initiatives at the ground level. Should you have any further questions or wish to share your thoughts, please reach out to Investor Relations or write to us at investors.relations@apollo-metro.com. Thank you once again for your time and trust. We look forward to reconnecting with you during our Q1 update. Wishing you all a great day ahead.
Thank you very much. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.